Hey, it's Sasha Evdokov. It is July 16th, 2015, and today we'll talk a little bit about being patient for the right stock market setups. I do have about, let's see, what do we have? 2, 4, 6, about 10 different charts I also want to cover. So we'll go over some of those stock charts and just show you some of the things that are moving, what's new, what's happening. But I definitely want to emphasize today about being patient for the right stock market setups or the right chart setups, because I find that patience is one of the things that kills a lot of traders and especially a lot of beginning traders. They get very impatient with things and get into the trades that they shouldn't be into, or get into trading stocks really when they shouldn't be trading. So that's what we'll talk about. So first thing I do want to let you know is that the book for shorting has been released, and you can go to the website and go to the books section right here. And once you're there, you just scroll down and it'll be right there, 245 money-making stock chart setups. It's volume 2. And you can go ahead and hit the Get It Now button, and that'll be in the Amazon section. It is basically similar to the 245 money-making stock chart setups for swing trading, except this one gives you practice and study for shorting charts. The final book that I'll be working on is Penny Stocks. That will come out probably October, November time, and that'll be one of the last course material for stock markets for the year in terms of books. And then the last one we have is kind of the options trading. So I don't have too much more material that I'd like to create in terms of products, because I feel like looking at all this material already, studying it all, I think there's a wealth of knowledge there for people to just grab and get a hold of and so forth. So that has been launched. I also launched a free course this week as well. Now, this course is a computer building, buying workstation for you. So it's an in-depth course for purchasing the right computer for your needs. Now, I've built a handful of computers over the years, but this is what the course looks like. So we'll talk about desktops versus laptops and Apple versus Windows, choosing parts for a basic computer, intermediate computer, powerful workstation, and just some things beyond the basics, and a final wrap-up. Now, notice these videos. They're about 26 minutes each, 39 minutes, 40 minutes. This one's even an hour long, 24 minutes. So the whole course about 3.5 hours, and it's actually absolutely free. And the way to get that is if you just go on the homepage here, and you just scroll down to just one or two posts. It's buying and building a stock trading computer. It's free. Click the video, and when you click it, there's a link in there to sign up and subscribe where the link is. So once you start playing that video, you'll see that button right there, and just click it. You'll get there, sign up, and you get the course absolutely free. All right, so with that in mind, basically we got the book that's out, the shorting book. So if you want that, grab the book. The course, that's also free. That's available. Last book that we have for the year coming out for stocks is this penny stock one. Again, I want to be crystal clear. I'm not big on trading penny stocks, but I enjoy looking at the charts for practice, and just for looking at more and more charts. I think it's healthy to just continue to build your awareness. And I know people have been asking me for penny stock related things, or cheaper stocks that are under $10. So I have been working on that book as well, and it just allows you to constantly practice some of the things in the charts. I mean, just think about it. Something for less than $20 or the price of lunch allows you to study and own that book for years, allows you to look back, allows you to continuously review things. And the second time you go through it, you start picking up new things. And so I don't look at a book as just, okay, well, what's written on the page, but how far can it take me personally in that journey? All right, so getting to the market today, I do want to talk about the market, and we will be talking about some of the things regarding being patient for your trades. So that's the key concept and focus. But let's take a look at some of the stocks. So what's happening in the market? What's going on? What am I seeing? I was watching Google just now for their earnings here and seeing what's going on. Chances are this stock will open higher here around the 640, over the $600 level at the moment, depending on how the conference call finishes off. But it definitely is popping quite a bit. But you never know when a stock will pop or when it will drop in earnings. So as I always say, and those of you that have been with me for a while, I don't trade earnings, meaning I get out of my position 100% of my shares most of the time. The very few exceptions that I may hold on to my positions or shares is, let's say you got into Google right around this level or this area, and you've been in it since 2013. The stock moved really well. Now it's moving sideways. If you're planning it for the long-term hold, that's perfectly fine. And then what you may do is before earnings, sell 90% of your shares and then get back in it, if it pops. But I've seen more often than not that a lot of these stocks, a lot of these earnings do go against you. So you never know which way they go. I mean, take, for example, Apple. What happened on the last earnings? What did we do? I mean, in the last earnings, right here was the earnings. Stock dropped, popped a little bit, and then it dropped and continued to sell off about 10 points over the next few days. So these things happen all the time with stocks. Now, since we are on Apple, let's take a look at it. Now, for me, this stock, even though it is popping, in my view, it's not a healthy chart. And for me, I'm sitting on my hands on this particular chart. I like trading Apple. I like trading the liquid stocks because it allows you to get in and out very without any signals or awareness or without getting read by market makers. So it allows you to kind of get into it stealthily for all your trades. So when this stock was breaking right here, this was a short for me. Now, we did peel some into strength, and then, boom, stock went back above it, so you exit. It hits your stop, you exit. That's it. You don't hold on to it because you don't know what the stock can do. And this stock, it's moving up on lighter volume. So to me, this move isn't real, and because it's not real for me, based on my strategy, based on my rules, based on what I see in the markets, because it doesn't have the volume, it doesn't have the juice, it's going up on air. This stock has been selling off for a while. It's been selling off since May, since the end of April. So we have, let's see, what do we have? We have 2.4 months, almost 2.5 months, where it's been kind of selling off or always been acting weak, and now we get 8 days, 7 days of a pop. I mean, look at the big picture. What's been happening? Okay, so I look at it, and to me, the only way I would get into this stock is if sentiment changes, is if things changes, because right here, I'm watching for that stock to break this level at this point. Now, if it starts increasing in volume, we got earnings and so forth, everything just starts moving together, then you can, of course, get in it earlier because it'll break that resistance points. But until then, I mean, we have some things that are working against us. So you want to do this with looking at the overall market. We want to do this with looking at the overall stocks and being patient for setups that are in your favor. What is working in your favor and what works out well. So in this case, I'm sitting patiently on the sidelines for this to play out. So we have BWA is a stock that I'm watching as well for a setup. This is a setup I'm watching for it to break lower. Even though this one's accelerating to the downside, I'm waiting patiently for it to break this critical line right here. I'm not chasing it. I could have went in it earlier, but right here, the risk is that it could bounce at this level. What did it do before? What did it do right here? The stock bounced at this level. And then again, it bounced again for almost a full 8, 10 months, the stock's bounced at this level. So if it breaks this critical level at this line right here on this much volume on 10, 11 million shares, that would be fantastic, and it could be a great opportunity for a short. So sitting and being patient is something that you need to learn to do in order to trade successfully. And a lot of things that beginner traders do is they get really antsy with the trigger fingers. So what they'll do is, let's take a look at the daily. The daily on this has been selling off pretty well. And if I would have caught it early, right around here, that would have been fantastic. And I could say, great, the trade's working out well. Unfortunately, not every trade is going to be a perfect entry and a perfect exit. So they'll look at this, the stock may break, they may get in it, and then the stock starts bouncing, and then they get out of it. They're not patient to get in it. They're not patient to hold on to it. Maybe they get in it right around here, and then the stock bounces because it's been going down for so long. The stock bounces and they get faked out for 2 days, and then the stock rolls over. That's what the stocks do. They fake you out, and you have to be patient to trade the setups that are in your favor. So for me, this one, I'm waiting for this setup and this break. Okay, here we have Sherwin-Williams with the major sell-off here, stock sold off. This one, it trades lightly on lighter volume than a huge company. So be careful with this gap. You want to use the top of this or in the bottom of this as your stops. Otherwise, it has a potential to fill it if it doesn't continue to sell off further. So watch those levels closely, because we also have that 200-day moving average that it's hitting right there on that line and using it as a little resistance. So just be mindful of these stocks that trade with lighter volume. That's why they move quickly. The next thing, FNBC, same thing. Weekly chart, stocks coming in. Nice, heavy, solid volume for a stock like this. Here we have 2 pops. One was right here, and now it's breaking here. Good entry point, solid for those of you that got in it. Second day follow through, looks good for higher prices. So for some people, what they do is they don't enter the stock right away. And this is what may happen to Google, for example, tomorrow. So let's say it bounces right here and it gaps up. Now, after that stock gaps up, what you can see is a follow-through day. Okay, so like this stock, or what you can see is a sell-off day to fill that gap and then potentially to bounce. So be mindful of how the price action is the second day as well. And for you, you may want to just get in it on that second day, because even getting in on the second day with fairly good volume can still play out with some nice, solid, and big rewards. Let's take a look at, there's another one, EROS. This is what I mean by waiting for the second day. So take a look at this stock, where even if you got in, okay, so looking at the overall trend, even if you got in the third day here on this line break, okay, so you got in right here on the third day, stock continued if you were patient. If you were patient, okay, to watch for the trend. Again, then the stock retraces, pulls back, okay, then you can get in. You can get in the first day, second day, third day, but then you got to be patient for the stock to consolidate. And then again, even if you got in the second or third day, be patient and allow that stock to run. But what a lot of people do is if they get in late right here, there's nothing wrong with the stock. They don't understand that there's nothing wrong with the stock, but they got in a little late because there's no perfect entries. There's no perfect exits, okay? But they weren't patient, okay? They weren't patient. And, the stock pulls back, and that's healthy. It's healthy for stocks to pull back. But if you weren't patient, it didn't allow you to capture the next part of the run, okay? Or the next part would be right here. Then again, they may try to get in again and say, I missed that move. Let me get back in. The stock's still doing fine. And then again, the stock pulls back, and it's healthy for the pullback. And then again, the stock powers higher, and they got out of the position somewhere over here at this level. So understand what's happening with the trend, with the market. Look at the bigger picture and start being more patient. It's very difficult. It's very difficult to be patient in this business. And that is because your emotions are tied to it. And one of the easier ways to be a little more patient is to, number one, trade less shares. Number two is you can walk away from the computer so that way you're not psyched out emotionally, mentally, psychologically from the physical day-to-day movements in the market prices. Because what you may have is just a movement that where the stock bounces up, goes down, and then comes back and finishes exactly where it started. So having the patience to know the longer-term multiple-day run is more critical and important than getting the perfect entry and exit. Because I always talk about, and I like to mention to people, as well as some of these recaps that we've done, that look at it, even if you got into this stock late right here, look at the run that you would have had. Look at the 10-point gain that you had. If you had 1,000 shares, 10 points, you can do the math. Same thing, even if you got in right here, 5-6-point run, 100 shares, do the math. Okay, same thing. Okay, so don't stress too much about your entry, exit, preciseness. It's all about being patient in the right setups, getting in at the right stocks at the right time and allowing them to run. Okay, so you do have to get into them at the appropriate times. Don't wait too long. But you don't have to get in at the exact same second, at the exact same moment that they're breaking. You don't have to do that. You don't have to worry about missing it by a minute or a couple seconds, because stocks usually will give you 2 or 3 opportunities. All right, let's take a look at Amazon. This one right here, okay? Look at this, how it was building. It was showing you its hand, retesting, okay? Here's a high. Retesting, finally broke. Even if you got in it the second day or the third day, right here, you'd still be up 14 points. Even if you took profits or you got in a little late, let's say you'd be up 7 points. That's fine. And you take half of your shares off now. So that way, you're not stressed or worried about a pullback in the stock. Okay, watch for earnings next week on this stock, but it is making highs. Look at that consolidation pattern. Okay. Look at the consolidation pattern here, okay? Look at how they move. Look at how they work, okay? Watch these things. Previous highs, same thing. Isn't that interesting how it nearly is at the same level, okay? Consolidation flag patterns, and they repeat. Okay, it's fascinating how that works out, but for many people, they're not patient in this game, and, you know, they'll get in it at, here's another example. I did it all the time. You get in it, stock popped higher. Let me get rid of some of these lines for you. Okay, stock popped higher. Let me mention to you, Google will be popping higher probably tomorrow. If it doesn't, then you know things changed in the conference call. But let's say stock popped higher right here. I would be the one that would enter this stock right there. At least I had a level head not to trade earnings, but you know, even 7-10 years ago, I would get into these stocks right here and then waiting for them to pop higher. And the stock started selling off. And it was a huge sell-off. I mean, looking at this sell-off right here, if I got into the stock, I mean, that's a 22-point sell-off, 30-point sell-off. That was painful. You know, that was painful when you're confident thinking that it's going up. You got a 30-point sell-off, but I didn't see the big picture. I wasn't patient. I wasn't patient to allow it to consolidate here to get into the entry point right there. Okay, I didn't see it. And it takes time. It takes years of study. You have to study the charts. You have to learn how stocks breathe, how stocks move. It's like a doctor. When you hear someone's heartbeat, you got to know, how is that heart beating? Is that a healthy heartbeat? Or does that heartbeat sound a little off? There's something wrong with that heartbeat. So always watching how that stock is moving, how that stock is breathing, how is it reacting, and being patient for these trades. And sometimes it takes a couple months to be patient, but then the payoff is huge. Then you get in it. Then, until then, you're on the sidelines, or you were trading it before for the longer term play. Okay, so Amazon looking good, higher prices. Watch out for earnings coming around the corner. Sun, another one right here, setting up for lower prices. Setting up for lower prices since October. It's been setting up since October. It just took the additional energy to get there from October to now. Okay, so it's been setting up. How do I know it's been setting up? You probably wonder, how did I know it's setting up for lower prices? Think of it as an explosion. If there's a nuclear bomb that goes off in the middle of a city, a lot of people are going to die. If there's a nuclear bomb that goes off in a certain area, even though the people right there in that region are going to die, the after effects, the energy that continues moving forward into other cities from the additional diseases, from the dust, from other effects to the water effects, it's still going to affect people. And unfortunately, that's what happens to these stocks as well, is that this is the bomb. This is that explosion. Okay, we really started over here, but a lot of energy came into it right there. Huge volume. Okay, here's another spike. All this started to add up. So if we start breaking these things down, we look at this. This had 1 million shares weekly, whereas previously we had 237,000 shares in a week. So we had nearly 4 times the volume just in that moment. Okay, then we continue going down, and we went down on 9 million shares. 9 million shares, 8.7 million. Whereas previously, we were moving on 714,000 shares. So, okay, the stock then plays around, isolates for a while, isolates here. Stock retraces to this level right here. And what we can do, by the way, is we can take a little Fibonacci. For those of you a little more experienced, take Fibonacci, draw it down here. I want to show you. Look at that. Look how interesting that is. 61.8. Okay, see that line? Those of you that have the green course or technical analysis course, 61.8 level. Look at where those bars are closing off. Let me zoom in. Look at where those bars are hitting exactly. 61.8. Let me make this bigger. Look at that. That's nearly perfect at their closing and opening prices. Okay, so look at how that pans out. Okay, and then the stock tries and retests those levels multiple times right here, okay, getting ready for the break. Now there's higher volume here, and then finally we broke it. There was your short entry point, and the stock is running higher, and because of all the energy, the previous energy that was building, this all unfolds fairly quickly. If we zoom in and get rid of those few bars, you can see we have a huge cluster over here in this level with bearish downdraft bars, bearish. Okay, we got some more bearish stuff coming in right here and pushing down versus going up. It's a lot weaker. So always be mindful of how the stock is acting, how it's behaving, and what it's doing, and be patient for the setup. Okay, so now looking at the weekly, moving it over, you can see even on the daily, we had 2 days kind of in the red, but right now it's going to pause a little. Usually when these stocks, when they sell off so heavily or when they pop so heavily, they'll pause because there was so many other people in the trade. Sometimes they'll bounce and they'll get to, let's say, 43, and then they'll sell off further. You have to be patient. Are you going to nibble some? Nibble meaning if you trade 1,000 shares normally, you trade 100 now or 250 shares. And then later you can add to your position, or are you going to be patient and wait till it gets to 43? And if it gets to 43 and you notice it's weak and starts selling off, that's when you take it and short it, if it starts acting weak on volume. So you have to have your game plan in place and be patient. So you got chances and opportunities of what if the stock does this, then you'll do that. If the stock does that, then you'll do another thing. So it's kind of like playing chess. You're setting things up for what's happening in the future, what may and could happen. Here's another stock right here, descending trend line. Stock is popping a little bit higher after breaking this descending trend line. So a good entry point was right there. After it broke that line, looking on the weekly, you want to be mindful that you probably only have a few more points in this stock until it tries a little pullback, unless more volume comes in. But always be mindful where the stock was. And this one at least was at the 47 and the 45 level, and then it sold off. So it could probably get to 41. You might get to 45, but be mindful where it was. Okay, but volume is coming in and looks good after breaking that trend line. And finally, Netflix, after doing its split and then the earnings call, notice the stock opened right here at the 110 level. And the stock just basically, here's what happened, pulled back a little bit. Okay, after pulling back, consolidating, that's why you wait the first half an hour after earnings. Okay, let people do their thing. And at 10 o'clock, that's where the smart money comes in. The intelligent investors, they say, okay, well, let's go for it. Stock is cheaper now, and let's continue to run. And if you got into that stock waiting for those highs to be broken, you still got you were up $4. Okay, so if you got in it right here at 111, you're at 115 now. It's a $4 gain. Not saying you have to be in the stock right here at 99. I'm saying get in at the right time and be patient, because right here was still a good time, good opportunity. Stock was moving. The big picture looked good. They looked clean. So be mindful, be patient. And I know that in a lot of things in our life, we want things yesterday. We want them now. We want them quicker. And part of that is social training, just because, think of it like with fast food chains. Just think of it with online delivery these days. We all want it very quickly. And I understand that is a convenience in modern society, but unfortunately, it teaches your brain in the stock market to really work against you. So if you aren't able to be patient for these trades on the long term, it actually goes against you. So if you're the type of person that gets frustrated in line, waiting for things, if you're the type of person that gets angry while you're driving because you have to be a little more patient because maybe there's an accident ahead, or maybe there's a red light, or you're trying to speed through things, then this business is going to be very difficult for you because you're not going to be patient. So for those of you that are very, very antsy, very A-type personality. People that are, trying to always move very quickly. If you always feel like you're the Energizer Bunny, you have to learn how to mentally calm yourself down. You have to learn how to mentally be patient and sit on the sidelines. You have to learn how to really adjust your temperament, because there's going to be months where you have to be patient for something to evolve, for something to happen, for a sign that, okay, this is the appropriate time. Now, the better you get at trading and the more you do it, the more often you will see clearer signals. If you're just starting out, you're probably going to try and enter a lot of trades quickly, but they're not the appropriate trades. So if you were doing this with a very good, clear, conscious mind into trading, but you were a new and beginner, there might be times where you're sitting on the sidelines for a couple months because you're waiting for the right trade. As you get better, you might see those patterns emerge more often and more frequently because your view and your ability to spot these things is quicker. However, if you can't be patient and wait for a month or two for things to play out, or wait for a month or two for that stock to set up, and you're doing all these wild trades and crazy trades, some people I've known in this Twitter space or YouTube space, they get in and they're in for a month, and within that month, they lost everything that they had. They lost their earnings, they lost their capital, and they're not in the business anymore. And then finally, within that next month, that stock they were watching or trading finally breaks out and has the right setup. So you have to learn. First off, you don't know what you don't know. And if you don't know what the right setups are, you need to look at a lot of charts. You need to look at a lot of healthy things in the marketplace or in the books. I mean, that's why I have the books available there for you. For less than $20, you can study charts of what looks right. Or even if the comments and the commentary in those books is not something that you can relate to, and maybe you're a whole different type of trader, or you like trading different types of stocks, then at least it's still a printout for you to look and study charts, maybe for your own way. But the point is that you need to be able to look at charts and study them and be patient and notice the time frame. Some of those time frames are weeks. You're patient for weeks. Some of those times you're patient for months. And then when the signal happens, when the action happens, that's when you have to execute. You have to take action. And if you're also the type of person that just sits on the sidelines and doesn't do anything, doesn't take action, isn't able to move forward, where you say, okay, I'll get to it next week, I'll get to it next month, then again, it's going to be difficult, much more difficult. You have to be the person that you want to transform into. And I know this starts getting into more business education and personal growth and self-development, but that's really what it's all about. I mean, if you want to be a successful trader, if you want to trade well, if you want to make great income from it, or if you want to have more time freedom and only trade 3 months out of the year, then you have to turn and transform into that person, not the type of person that's worried about every little tick or signal. You have to move and focus on the larger picture. You have to transform and be more patient for you to allow you to have that lifestyle. Because in the end, that's really what wealth is about. It's not just income. Income is just one way to judge it, to judge the wealth, and that's what's in the tabloids, and it's a way to keep score. But something that's not measurable is the quality of life that you have, the quality of life that you have amongst your family. It's the W's, the who you associate with. Where are you associating with those people, or where are you? Are you enjoying yourself in the environment that you're at? So it's not just about the quantity of dollar figures that are in your account. That's just the easy way to count score in life, and I think it's probably one of the worst ways to count it in life. Look at it in terms of success, in terms of other factors, things that are more immeasurable, so look at it that way, because that in the end is worth much more in the long run than all the money that you can hoard for the future. So I hope this video was helpful, insightful, and maybe just pushing you a little bit to be a little more patient, because if you gain a little more patience, if you're waiting for the right setups, the higher probability setups, you may only need to trade a couple of times a year and be profitable and make your year from those trades. So it just really comes down to your trading strategy and objectives. But look at that long term. Find a little patience, and I'm sure if you get a little more patient about those setups, those trades, you'll be much more profitable just from building up that patience factor for yourself. All right, thanks again for joining me. Remember, you can check out that book, 245 Money-Making Strategies for Shorting. It's out. It just was out this last week, July 10th. It was posted. I sent an email, and you're welcome to take a look and get it on Amazon. I'll be in Florida this next week, so take a little time to spend some time with the family, go to the beaches. So that's where I'll be, and spend some quality time there. So hope everybody else is doing well. I'll still try to do probably a recap from there. We'll see how things go. So I'll still go ahead and make sure we have a recap, and my assistant is helping me out with some of the emails, questions, and things like that. And if you have any account issues, so don't be shy to get in touch with me. But other than that, thanks again for all your fellowship. Thanks again for reaching out and just sending in your comments, your insights, your feedback. It's all a wonderful journey, and those are the things for me that are immeasurable. So it really adds a lot to for me when I get to talk to some of you and you're telling me about the successful trades you're doing and the things that you've learned from the material that I've released, as well as from these rapid recaps. I know that a lot of you watch almost every single week of these rapid recaps and try not to miss a week. So thanks again for sticking with me and joining me. And I hope that this video was also helpful for you in this earnings environment. So be patient on those earnings. Wait for the appropriate setups. You don't have to chase them. There's always another trade. And if you missed it, remember the word next, because there's always going to be other stocks, other companies that come your way. All right. Thanks for watching. Take care, and I'll see you next time.